Hello everybody, and thank you for joining us for another weekly market Forex and futures review for April 22nd to the 26th trading week. This week here, it's a bit of a short week as we have European and UK bank holidays for Monday. And so the price action for today, not necessarily that it was muted, but it was definitely not trending as with as much volatility as it would normally move with. So a bit of a slower day, and it was coming off of Easter long weekend as well too. So you had a number of North American markets closed for the observance of Good Friday the previous week, and so all in all, last week was a bit of a short week, and this week here as well. But that's not to say that we don't have lots of activity coming up. Again, there are a couple of more bank holidays going through the rest of this week, but nothing serious that I believe is going to affect any of the outcomes of where I believe price is going to head for this week. So I'll just bring up the economic calendar real quickly here, and obviously you can see European banks, French and German bank holiday, Italian bank holiday, and then again the UK bank holiday as well for Monday. Going into Tuesday, we have Australian dollar CPI quarterly news, and then Wednesday we have some medium impact and euro and pound sterling news early on in trading on Wednesday, and then we have a whole lot of Canadian dollar Bank of Canada monetary policy news coming out. So we've got a rate statement coming up in terms of interest rates. I believe the forecast is that they'll be keeping interest rates unchanged. So I would imagine we'll see more of what's to come, more of previous going forward. Sorry, that doesn't sound right. More of what we've seen in the Canadian dollar going forward, I believe, is what we'll see. So that's, again, coming in on Wednesday. And, again, a whole lot of news there. So you just be careful trading the Canadian dollar on Wednesday. Another Australian dollar bank holiday for Wednesday as well. And then yen has a Bank of Japan has an outlook report and monetary policy statements on Wednesday as well. So I'm hoping this news here for the yen will start to drag it out of that current consolidation level that it's been in. And we'll talk about that here in a minute as well too. Again, that we do have a small Italian bank holiday for the euro on Thursday. I don't think that's going to affect too much. I believe that we'll still see markets trending fairly decently on Thursday. Going into Spanish unemployment rates, and then obviously U.S. dollar core durable goods on Thursday. Finishing the week off, we have advanced GDP numbers coming out on Friday for the U.S. dollar. So all in all, not a lot of landmines other than the Canadian dollar one on Wednesday. So I believe we should have a decent trending week in the Forex markets. Now going forward here, U.S. dollar, as you can see, we finally broke out of this little pattern here. I don't know if this is going to be short-lived, and they're going to run down, but I'm hoping that we'll probably see price supported in here. As you can see, the range that they're in, look at this consolidation range that they've been in, and I'll just maybe change the color here a little bit so it stands out a little bit more from all of the other ones in here. But you can see in here that they have really worked this area in here, this 96.50 to 96, call it 90 level, has really been had a lot of time spent at it, as you can see here with these consolidation levels in here. Price ran up and ran back down through in here last month, and then now again we're sitting in just sideways all of towards the end of March and basically all of April. Finally last Friday it took us out of that, only for Monday to come right back in. Now again, a lot of decision making at these levels here, but it did bring us out on Friday, and I'm hoping, and it basically sort of filled this little gap in here. If you ignore this wick right here, we have a nice gap down in price in the previous month, end of February, only for them to come right back up here and just barely, just failed to fill that gap in here, and then finally last Friday it really came in and smashed into that and closed that up. Finished higher as well too on the week, and now we're starting off Monday's trading, albeit a couple of bank holidays. It is trending softer. So I'm looking at 96.84 specifically as a level that could have some support on the downside. If price does keep leaking, which we could see it going into Tuesday's London Open, we could see price run as low as 96.70, and that's pretty much going to be my line in the sand. They have worked this level down here. You can see all these wicks down in here, so there would be no reason for them to come underneath this 96.70, in my opinion. I wanted them to come in and just come into this green area just a little bit more. We just failed to do so about 2 weeks ago on this candle here, but it did come down and sweep underneath this low here by about a pip, and that's really all we need, and you can see the result in reaction to the upside. So I'm expecting more of that to continue until this gives me reason to think otherwise, but I believe the 97.60 level, this whole high up here, could be the target going into next week if it doesn't decide to want to reach it this week. That's a little ways away. So I don't think they're going to get to it overnight, but certainly if they decide to put some momentum behind any of these long positions that they've got, we could easily get up into there. And going forward, I believe there is a real strong chance that we can run up to the 98.40 level on the upside as price progresses higher. So we've talked about this level lots before. And again, if that's, just going back down to the daily, if the 96.70 level holds up, we don't see price breach through it and close lower, then I think that's going to be the projection going forward. We're finally out of this little range here thus far. I don't want to see this go too deep into it. In fact, I'd like this to be the low rate in here that we set for the Monday, and then price starting out stronger and running higher on Tuesday. So hopefully we'll get some more of that, and we can finally get out of this trending range and kind of get back to business. It's been a little bit stagnant trying to trade some of these pairs the past little while, and so I'm hoping that we're finally going to be out of that. Moving into the euro, you know, again, nice steady decline on the euro. Price is really actually starting to kind of form itself into a bit of a wedge here, a bit of a descending wedge pattern. And so I'm hoping that we're going to see a continuation. If we do see that higher price in dollar, that we do see this run lower on the euro. And again, very similar area of confluence on the euro USD as on the US dollar at this 110.20 level. I'm going to throw this on the chart here as a potential downside target for price to run back down to not too far away. We're only about 230 pips from current location. And what I'd like to see going into this week is if we can get a little momentum, a little run up on the Euro USD before it starts to put its high in, before it starts to put its low and start to make a run lower. I'd like to see this level up here get tagged up to just basically the bottom of this consolidation range, which comes in at 112.75. That's what I'd really like to see on the upside. Price definitely doesn't have to get up there. Whoops, sorry, let me fix that. 75. Price definitely does not have to get up there, but that would be a great level for it to try to reach for. But what it could do is just sort of leave this area from where it's at right now and just continue to fall over. So what I'm sort of thinking here is on the daily, if I see price want to start declining past this high here from last Friday, then I may just get short in around there as confirmation, and then we'll just hold out for a run below this low and a run below that low. And subsequently, I mean, if you want to get into a swing trade, once these lows are broken, you could more than likely ride a swing trade all the way down, a couple hundred pips down to here. These lows aren't too far away. This low here comes in at 111.20, so really it's not very far away from current location. So that's what I'd like to see going down into the hourly. That level here just brings us up right back into the small consolidation level right in here. I'd like to see just a real quick retouch into it and then price to fall off and run lower. And as you can see here, they came up and created. Now this is the one thing, they did come up and create two relative equal highs here. This candle came in at, if I can get the cursor, hopefully you can see at the bottom right hand corner of my screen, price comes in at 113.23, and then this price in here comes in at 113.22. So they just failed to get above that, leaving those two highs. So if we get higher than this block of price action here, keep in mind they may want to run these up to there. I think that would be. I was watching for price to get above that all last week, and they didn't want to do it at all, and really aggressively sold off. So if we fail to go lower, then that's going to be my target on the upside. However, I'm hoping that the U.S. dollar, if we do in fact see continuation to the upside, and again, my line in the sand is here. I'm not going to call that it's definitely going to be to the upside until I make sure that this price down here has been supported and we're not going to retrace below it, and we start to see price increase. Then I believe we'll see the price for the euro fall down. But again, if we start trading up into this area of price right here, then I'm going to look for these highs to get ran out and potentially a retouch back up into these levels up in here. So we'll see how that goes when it pans out, but I'll be looking for them to make a pretty decent move going into London Open for Tuesday. Going into the pound, more of the same. I'm looking for a continuation to the downside. We've had this level marked out on the charts now for quite some time. I'll actually just maybe put the low on that there. 129.60 or 129.55, I guess, to the downside. Would be a run below all these lows right in here, and basically retouching back up into this section in here. So I think they're going to come down into it. We'll see what happens when price gets down into there, whether it wants to support price and reject to the upside, or if they're going to continue pushing price down again. With Brexit and everything going on in the UK, anything's fair game. So they could be just coming down to sweep these levels down here, reject, and we run higher. But if we start to see price really start to stab down, then they could make a run for this low here. So just be careful on the cable trading forward, even going into this week here. I would expect them to hopefully start to move this thing lower. Euro GBP, if we do see the cable run lower, then we should hopefully see Euro GBP continue on its trend higher. Which would mean that we'll probably get above these relatively equal highs in here on Euro GBP. So just watch for that. Real quickly on the U.S. CAD. Now here's what I was talking about with U.S. CAD monetary policy news coming out. It is typically, if they're going to pause rates or continue to keep them where they are and not increase the rates at all, it lends for the U.S. CAD pair to continue to drive higher. And if we do see U.S. dollar prices running higher, then it should in turn also support price to the upside. And I think, again, I've had this 135.60 level on my charts for quite some time. I think we could start to hopefully creep up into that. It's really working this level in here right now, putting a lot of wicks to the downside. And last week, again, this was last Wednesday's trading, they came down and swept underneath all of this block of price in here and rejected immediately, and now we're right back into there again Monday. So I think there's a very good chance that we could have set the low for the week here for US CAD, and then those rate policies, they could just put an inside candle day in tomorrow going into Tuesday, and then Wednesday we really start to see them get up and start to run all these levels, because as you can see here, we've got 1, 2, 3 relatively equal highs up in here that they never came to raid. So at the very least, whatever we decide to do, I think 134.20 to the upside is going to be a target. So you can look at that. I mean, that's a good 80, just about 100 pips away. We could continue to come down a little bit, but I wouldn't expect them to be making a run for this low. And I guess I can give you my line in the sand again. If I see price coming down lower than, we'll just make it 133.00 to the downside. If I see price running lower than that, then I'm going to abandon the hope of this thing running higher. I don't think they need to come back down, sweep under all of this, and then run higher. I think they're just going to jam it straight up, to at the very least, take out these highs here. And then, like I say, that upside target could definitely be coming into play sometime in the near future. So, and that upside target again, 135.60 is sort of what I've been liking on the chart. We also have equal highs up here at 136, so I wouldn't discount those also, especially if the US dollar has a real good run higher. So that's what I'm looking at for US CAD. Yen, we have monetary news coming out for yen. I believe it was on, it's the monetary policy statement and outlook report on Wednesday evening. So about 11:30, my mistake. It's Wednesday late morning at 11:15 a.m. New York time. Uh, you can see prices really been stagnant in here for the past week. I think they're leading up, obviously, to that rate report, and we could see them obviously continue price higher. We have a couple of equal highs in here, so one of two things: they'll either pop price up into here and reject, and then run it lower, or they'll just keep running up into here and keep coming up above this level here. But we came up to this level once before, this consolidation level that's in here. We came up to it once before, right in here, and we had a big rejection all the way back down to recapitalize down here. And now it's made a very nice increase since then. So I think there's a real good chance. We're up here once, we're up here twice. There's a very good chance, especially with stronger US dollar coming out, that we could see a run higher in US yen. So if you are a US yen trader, look for that. But again, I wouldn't be trading this until after that monetary news event coming out Wednesday, late morning. I would probably recommend you see what price wants to do until it settles down, because there is a good chance they could certainly run it lower. So there's always that. Australian dollar, we're just sort of sitting in the middle of this range in here. So we had a nice little run up into here, creating a couple equal highs that they still haven't wanted to get. Again, same type of idea, US dollar. If we do see that run higher, then this thing will probably push lower, and we could see price potentially come down into here. But they're really consolidating this pair for a long time here, so we're going to have to see what they want to do. So I'm not going to make any calls yet on Australian dollar, because we're still technically in this range here. And that leaves me to finish up with oil. So oil had a very strong day. It actually started on Sunday. If you remember, I posted a couple of charts on oil on Sunday, yesterday, and they just created this giant up candle here. Came right out of nowhere, exploded price up, and the high of that candle came in right to these lows in here at $66, and it looks like 1 penny. I'll get the exact high. Oh, I'm sorry, $65.96 is where it came in at. So let me just put this on here, $65.96, and that came in at the exact high so far of Monday. We just had Monday's day close. We'll be going to Tuesday. So just, again, exercise some caution in here. If they do want to continue higher, they may not give you a real good chance of getting in. Ideally, I'd like to see them come back. Let me zoom in a little bit. Ideally, I'd like to see them come back down a little bit and retag off of this old consolidation, so we have a breakout retest. But if you look what it's been doing historically, prices come in and exploded up into here, came back and retested these highs in here and expanded into another consolidation level and dropped down, very shallow drop in here, and then expanded higher. And then we had another consolidation level in here and expanded and came down very shallow right in here. So we could see price pop up again, more of the same, and then just briefly retouch lower in here. So I'm not going to get too eager about getting long on oil, and I'm also going to exercise a degree of caution because we are starting to get into the upper portions of this price range in here. Anything is possible, and I'm just going to put this on the chart here. We are coming and retracing back up to that 72 to 79% retracement level. These typically tend to be areas of high confluence with reactions at levels like that, and so I wouldn't discount them coming up and then rejecting all the way back down, and potentially even coming right back into the middle of this range, back down into this area here. It kind of lines up with the Fibonacci right around this level here. So again, you know, just be careful, watch that. There could be a downside target if they decide to reject off of these highs. Just don't want to see you get caught in a long position on crude oil and see it get taken out or anything like that, because you think it's going to come and swing above here. Now, don't get me wrong, it could certainly come swing above here, but I'm just sort of at the opinion right now where price is starting to get mature. I mean, if you look at this, we haven't really had a break in market structure and then come back down and capitalize off of any of these positions down here and really run any stops significantly. So it's definitely due, and I wouldn't be surprised if it happens somewhere in this area here. So that's everything for this week. Members, obviously, we are going into Tuesday London Open, so you'll be getting a live session coming your way here for Tuesday, and you can watch for that. If you're not a member, go ahead and check out f45trading.com. We've got some great package options there. You can join our chat room, you can get into our signals room, you can get into our live markets segments where we discuss markets live. as it's happening, and potential setups going into the rest of the week in extreme detail. And then obviously there's a lot more to that. We have coaching packages if you're just getting started with trading and you want to learn more, or if you're a beginner going into being a novice. There's lots of information there for you that we can help you with, and all the way up. So there's a little bit of something for everybody. So go ahead and check us out at f45trading.com, and I appreciate your time. If you haven't already, just click the bottom button here and subscribe to our YouTube channel. That would be much appreciated, because once a week we do these live market reviews for you to help you out with your own market charting analysis. And with that, I will end this, and we'll see all of you next week for the next week's recording. And if you're a member, we'll catch up to you in the chat room. Thanks, guys. Have a great day.